It's another data point that, again, I said it last week. I'll go out on a limb and predict my equivalent November fall predictions. Last fall, it was that the markets were going to poop the bed. My prediction now is that I think the markets are bottoming and consolidating.
Yep, 100%.
And this is the time, I think, to start nibbling and start getting ready to really rip the money in. And I think there's enough signals every day that kind of like tell me at least that on the margin, it's time, because I think the markets do a reasonably good job of digesting news and then pricing the forward reality, right? Like today's price is really everything we already know. And so the real guess is what's about to happen in the future. And from my perspective, I'm actually pretty starting to get a little constructive here. I think that when companies like Facebook really do this, and like if you think about it one way, the financial markets have always had this thing that we have called a Fed put. What does that mean? A put is essentially the right to sell something. And what market participants have always known for the last decade is that if things got very hairy, if there was uncertainty in the market, the Federal Reserve would, and they have, consistently stepped in to create a buyer of last resort. And so it always eliminated that last part of true, supply-demand balance, because they would just come and say, don't worry. In many ways in tech, what the big tech companies were that. You could never really find what the true market clearing price for an engineer was, or what the true amount of expenses you should spend on office space or, free services. Because you always had these companies, which was an escalating arms race. If one company had a massage, the next company had gyms and massage and physical therapists, and the other company would have buses to take you to the gyms and massage and therapists, and the next company would have protein shakes that were freshly made. And it just kept escalating and escalating because the costs didn't matter. And they wanted, if nothing else, to get that marginal engineer or product manager or business person to work at their company, which eliminated the risk that they would actually start something to disrupt them.
Blocker strategy is very real. You should unpack
the blocker strategies is very real. So when you take this big tech put out of the market, you will get true price discovery, and you will find out what the real price should be for this kind of an engineer, that kind of a product manager. You'll find out what are the real expenses you need to bear in order to build a real lasting business. And you'll be able to sort through all of that stuff out. So I think it's a really good moment. And again, it's yet another indication to me that I think broadly speaking, the markets are now starting to stabilize. All the irrational behavior is starting to exit the system. The party is in the last few hours. Volume's going down. The alcohol's being taken away. People are hanging around with a little bit. Lights are coming on. They're like, oh, I've been here a little too long. And I think that that's a very healthy process for an economy. And I think that that's what's happening right now. So I'm constructive. I'm a little bullish. I'll go out on a limb. I think, we could be 3 to 5% from the lows, but we're more near the lows than the highs.
It certainly feels like the double bottoming out process was the bouncing along the bottom. And yeah, who knows how hard the landing is, but I think it's a great setup for startups and people who want to start companies. I don't know if you saw Gurley did a great interview that trended on the Twitter, and he was just saying, this is the best time to start a company. And I have to agree with him. Like, you're going to have talent available. And like, who are you competing against for buying ads? Like, there's so many marketing opportunities available. The first thing to go in a down market like this is advertising and marketing. So,
and by the way, we will also relive what we have empirically known to be true, and it's been pretty well proven. The investments that one makes in this period will probably be the best for many, many years to come, because they'll have the most asymmetric upside. And that was true in 2008 and 9 and 10. It was true in 2002, 3 and 4. You're talking incredible companies just in those two periods. Think about this: Atlassian, Tesla,
Uber, Google,
Airbnb, Uber, Instagram, WhatsApp. Incredible businesses that have created tremendous value. And so there are businesses that have been invested in for the first time in 2022 and will be invested in for the first time in 2023 and 24, which will be the leading winners of this next phase and this next leg up. And so the real opportunity is to find out who those companies are and get behind them, I think.